Good afternoon, everybody. Welcome to Zentax Talks. We'll wait for another couple of minutes to let others join. So please wait up. We'll start the session soon. Good afternoon, everybody. Welcome to the Zentax Talks 69th session. So, as we keep repeating every session, I would also like to start the session by saying thank you for attending our sessions every week, and do keep attending our future sessions, and let the feedback and your queries keep flowing. For any queries or feedback, write to us at solutions@zentaxclinic.com. We'll be happy to answer them. So let's quickly jump into today's topic. The topic is export and import of services, GST implications. So this is a very niche topic, as you all know. Like, not many of us would be dealing with it on everyday basis, but still it's an important topic to understand, given the economic conditions that we are in right now, the tariffs imposed by countries left and right. I think it would be very helpful in understanding the basics, or the very important provisions relevant to exports and imports of services. So to discuss on export of services, we all know very well that exports and imports are generally treated as interstate supplies. So their taxability and leviability of GST is covered under IGST Act. Now, in general, in the supplies made within India, in the domestic territory, on supply of services, we know GST is leviable. But what happens in case of exports? That is, I am exporting a service to another country, to a place outside India. What would happen in that case? The general motive behind every country is to develop their own exports, their own products in the international market. Therefore, they would never want to export the taxes, that is, add up the prices of the goods by imposing taxes, adding on taxes to them. Therefore, the general maxim is don't export, like export the goods or services, but not the taxes. Therefore, exports are always treated as zero rated supplies. Zero rated supplies meaning the exporter will never end up with the tax burden, be it at the outward supply level or at the inward supply level. We'll discuss on this in detail in the upcoming slides. Now, okay, if export of services just as simple as saying that there is a person, my recipient of service is outside India and he pays me in foreign currency. Is it that simple? No. Export of service will have to be read in detail to understand if a transaction could be truly called as export of services. Now, export of services has been defined under Section 2, Clause 6 of the IGST Act. It gives us 5 conditions, and these 5 conditions are not optional. They have to be simultaneously satisfied in order for a transaction to be called as export of services. Now, export of services is defined as, it means the supply of any service when the supplier of service is located in India, the recipient of service is located outside India. The place of supply of service is outside India. The payment for such service has been received by the supplier of service in convertible foreign exchange or in INR wherever permitted by RBI. The supplier of service and the recipient of service are not merely establishments of a distinct person in accordance with explanation 1 of Section 8 of IGST Act. So let's understand this. So export of services has 5 conditions, which is the supplier of service should be in India, that is the exporter should be in India, the receiver of service should be outside India, and the place of supply should be outside India. And for this export of service, you need to receive the amount in foreign exchange or INR wherever permitted. This INR wherever permitted has been given as a circular by the RBI saying the exporter can receive the proceeds in INR in special Vostro accounts held by the foreign banks in the authorized dealer banks in India. So that is that INR as permitted by RBI. Now the supplier of service and the recipients, the supplier and the recipient should not just be an establishment of a distinct person. They should not be a place of business of a distinct person. Now let's understand these terms in detail. So going with place of supply, we saw that place of supply should be outside India for exports. So how do we determine this place of supply? Under Section 13 of the IGST Act, place of supply provisions have been provided in case of either the supplier or the recipient, either one of them is outside India. In that case, you come to Section 13 of the IGST Act and refer to the place of supply provisions. So general provision when it comes to place of supply is the place of supply would be location of the recipient. Let's say for some reason you are not able to ascertain the location of the recipient. In such cases, you go with the location of the supplier. So this is the general provision. It is the location of the recipient or the location of the supplier whenever the recipient's location is not attainable by us. So therefore, place of supply is this. However, you have certain specific services or goods for which place of supply differs from this general provision. And those specified services or goods have been provided in Section 13.3 to 13.12. I've not discussed about those in detail. We'll have a detailed session on it in future sessions. So moving on, we saw that the place of supply will be location of recipient or location of supplier whenever recipient's address is not available. Let us look at few scenarios. That is, the supply is received from, when we have an option to know the location of the recipient, we look at it from the recipient's point of view. So when the supply is received from the registered place of business of the recipient, then the location of the recipient will be the such registered place of business, and in turn the place of supply will be such registered place of business. Now when the recipient is receiving such supply from other than registered place of business, and that will be known as fixed establishment. Now fixed establishment, the term has been defined in Section 2 Clause 7 of IGST Act, and it means it is a place other than registered place of business which has a permanent structure of permanency, and it also has a structure to contain the human resources and technical resources to supply any services or to receive or use any services. So the fixed establishment should be of a permanent nature, and it should also have the capacity to supply some services or receive and use such services. So this if the recipient is receiving supplies services from such fixed establishment, then the location of the recipient will be such fixed establishment. Now, if the recipient is receiving supply from more than one establishment, we'll decide on the establishment which is most directly attributable to the supply. So such establishment that most concerned, which is most directly concerned with the supply, will be the location of the recipient. Now, let's say you don't have any of the above locations. You don't have the registered place of business, you don't have the fixed establishment, and you also don't have any kind of establishment details. What will be the place of supply in this case? So the location of recipient will be their usual place of residence, and the place of supply will be the location of recipient. Now, let's say in all these scenarios, you had the location of the recipient. But we also saw that in some cases, you won't be able to ascertain the location of the recipient. Then you go ahead with the location of the supplier. All the same scenarios, all these four scenarios, if repeated from the supplier's point of view, that is, the supply has been supplied from the registered, that is, the service has been supplied from the registered place of business of the supplier. Then such registered place of business of the supplier will be the location of the supplier, and it will be the place of supply. Now, other than registered place of business, it will be the fixed establishment from where the service is being rendered by the supplier. Now, if the supply is being provided from more than one establishment, it will be the establishment which is most concerned with the supply directly. And in absence of any of the above addresses, the usual place of residence of the supplier will be the location of the supplier, and in turn it will become the place of supply. So this is how we ascertain the place of supply for general provisions, for general services. Now we also had another condition, that is the fifth condition, is the supplier of the service and the recipient of the service should not merely be establishments of distinct persons. Now, this establishment of distinct person has been provided for in explanation 1 of section 8 of the IGST Act. Now, this explanation 1 goes ahead and says, for the purposes of this act, that is for the purpose of IGST Act and for the purpose of export of service right now in this case, if a person, where a person has an establishment in India and any other establishment outside India, an establishment in a state or UT, and any other establishment in another outside that state or UT, an establishment in a state or UT, and any other establishment in the same state or UT. So first is establishment in India and outside India. The next one is establishment in a state or UT and outside that state or UT. The third one is establishment in the same state or UT. That is multiple establishment in the same state or UT. These will be considered as establishments of distinct persons. Now, explanation 2 says, gives you the meaning of establishment in a territory. Now, if a person is carrying on a business through a branch or an agency or a representational office in any territory, shall be treated as having an establishment in that territory. So, if you look at it carefully, both these explanations, they talk in terms of a single person. It means a single person having a single registration, let's say PAN. However, under GST, they might have multiple registrations. So let's look at this establishment of distinct persons with few examples. Now, because of not having a clarity in this, we had a circular, that is circular 161, issued on 20th September 2021 to give certain clarifications on establishment of distinct persons, and these scenarios were specifically explained in such circular. So if a supply of service is by a branch or an agency or a representational office of a foreign company. So foreign company has been defined under the Companies Act as a company or a body corporate incorporated outside India, but is having a place of business in India. So we clearly know it is incorporated outside India, not under Companies Act. So even here, it has been specifically given that it is not incorporated in India. Now, this service is being provided to an establishment of this said foreign company outside India. So a foreign company is there, one of its branch or agency or representational offices in India without being incorporated in India. And this branch is providing services to the establishment of foreign country outside India. Will they be called as establishment of distinct persons? Yes, they will be called as establishment of distinct persons because of explanation 2 to section 8. It clearly stated a person carrying on a business through a branch or an agency or a representational office in any territory shall be treated as having an establishment in that territory. Therefore, this branch which is in India has an establishment here, that is establishment in India. Now it is supplying to an establishment outside India. Therefore, they automatically become establishment of distinct persons, and it will not be treated as export of services, because export of services specifically says the supplier and recipient should not be distinct establishments of distinct persons. Now, looking at the second example, the service is provided by a company incorporated in India as per the Companies Act of India, and it is supplied, the service is supplied to a branch or agency of the same company located in another country but not incorporated under such countries' acts or laws. So a company is in India, incorporated in India, and it also has a branch in another country. However, that branch is not incorporated as per that country's laws, corporate laws or rules. Now, will they be called as establishment of distinct persons? Yes, they will be called as establishment of distinct persons, and therefore the service provided by a company in India will not be treated as export of services. Now, the third scenario is where a subsidiary or a sister concern or a group concern of any foreign company which is incorporated in India to such foreign company, any other establishment of such foreign company also. Now here, this foreign company has a registration wherever it is situated in that countries, under that country's corporate laws. Now this subsidiary in India is also registered as per Companies Act in India. Therefore, these both are treated as separate persons and they are not establishments of a distinct person. And now this will be covered under export of services, because the supplier and recipient are not merely establishments of distinct persons. So this is the explanation of establishment of distinct persons. So as we read, let's recall, export of services will be considered as export of services only when the 5 conditions are satisfied. The supplier should be in India, the recipient should be outside India, place of supply should also be outside India, the consideration for such exports should be received in convertible foreign exchange or INR wherever permitted by the RBI, and the supplier and the recipient should not be merely establishments of distinct persons. Now, this is with the definition of export of services. Let's look at another specific example, a specific scenario. Let's say I am an exporter. I get an order for a service from a recipient outside India. However, I know a part of such service will only have to be performed by someone else. So I outsource it to a person outside India itself. So I am outsourcing a part of my contract to a person outside India. Let's say I am supposed to receive $100 and I will be paying $20 to the person, to the subcontractor. Now, the question is, in case of an exporter of service outsourcing a portion of service contract to another person located outside India, what would be the tax treatment of the said portion of the contract at the hands of the exporter? Also, there may be instances where the full consideration for the outsourced services is not received by the exporter in India. Now, let's understand there are 2 supplies taking place in this scenario. Me being an exporter, for whatever contract I've entered with the recipient, I am providing such services to recipient located outside India. Now, this would automatically come under export of services. And I am also subcontracting a part of the contract, which means I am getting services and importing services from a person outside India. Now, this will be import of services. For export of services, it would be 0 rated supply. For import of services, I would be liable to pay IGST under RCM. So therefore, if I'm receiving $100, it is zero rated, and for the $20 that I'm paying to the subcontractor, I am supposed to pay GST under IGST under RCM. Now we saw there may be instances where the full consideration is not received. When will such instance arise is the recipient is directly paying that $20 to the subcontractor. That is, I am getting $80. The recipient is paying the balance $20 to the subcontractor themselves. So now in this case, what would be the value of my export of services? The export of services will be $100. That is the full value, provided I pay the IGST on the $20 paid directly by the recipient to the subcontractor, and the RBI allows such transfer of $20 directly from the recipient to the subcontractor. So therefore, in this case, my value of the export would also be $100. So this clarification has been provided in Circular 78, dated 31st December 2018. Now, another important aspect of whenever we discuss about export of services, another important aspect that keeps raising is intermediary services. Now, intermediary services, we often get confused between intermediary services and export of services. Intermediary services, let's look at the definition. It has been defined under Section 2, Clause 13 of the IGST Act, and it goes on to say, intermediary means a broker, an agent, or any other person by whatever name called, who arranges or facilitates the supply of goods or services or both or securities between two or more persons, but does not include a person who supplies such goods or services on his own account. So here they very clearly mentioned they are a broker or an agent or any other person who are merely facilitating or connecting the supplier and the recipient. They don't by themselves on their own account provide such services or goods. And there should be two or more persons in this transaction. Now, this definition still had many controversies. That is, there were many rulings, advanced rulings and court rulings, which were contradictory in nature. One said it is an intermediary service, one said certain services are not intermediary. Therefore, we got another circular, circular number 159, dated 20th September, which gave further clarifications on the same. And before that, as we read in the definition, it is clear that intermediary should merely be a facilitator of the transaction, and they will not take possession or ownership of any goods or services during the period of providing the intermediary services to such supplier or recipient. Now, the circular number 159 very clearly states who is an intermediary or what is an intermediary service. It says there should be a minimum of 3 parties. Now, who are these 3 parties? One will be the supplier, one will be the recipient. The supplier and the recipient for whatever supply they are planning to do. And the third will be the intermediary person who is facilitating the supply between the supplier and the recipient. So there should be a minimum of 3 parties. Now there should be 2 distinct supplies in this contract, in this one particular service. One would be the main supply. That is, the supplier is supplying the goods or services to the recipient. Now the next would be the ancillary supply, which is the supply of the intermediary services by the intermediary person. Now, what would be the role of intermediary? They would just be a facilitator or a connector between the supplier and recipient. And they are not the main supplier. That is, they don't on their own account supply any goods or services to the supplier or the recipient other than the intermediary service of facilitating or connecting them for their own supplies. Now, let's say the supplier of the principal, the original supplier is subcontracting a part of the supply, that won't come under intermediary, as intermediary is only facilitating the supply. They don't they don't by on their own account provide any part of the original supply. Therefore, subcontracting is also excluded. So, the circular clearly mentions there should be minimum of 3 parties, there should be 2 distinct supplies, and the role of intermediary is not the main supplier, and subcontracting is excluded. Now, the question here is, what if intermediary services are same as export of services? To understand this, we'll have to look at the place of supply provision for intermediary services. Initially, when we were discussing the place of supply for export of services, we mentioned that the general provision is place of supply shall be the location of recipient or the location of supplier if the location of recipient is not ascertainable. However, we also mentioned from section 13 subsection 3 to section 13 subsection 12, you have specified services for which place of supply is specifically and individually provided for them, and one such supply is one such service is intermediary services. Now, section 13 subsection 8 clause B of the IGST Act says the place of supply of the following services shall be the location of the supplier of services. That is, for intermediary services, the place of supply shall always be the location of the supplier of services. Now, another important point to note here is section 13 is only applicable if either of the parties, either the supplier or the recipient of the supply should be outside India. So this is an important point to be kept in mind. Now that we've established that the place of supply for intermediary service is always going to be location of supplier, let's go and look at how it would fit, how intermediary service would fit under the definition of export of services. Now, the export of service says supplier of service should be in India. So the intermediary is in India. Recipient should be outside India. Let's say the recipient, the supplier or the recipient of the original supply is outside India and they've reached out to the intermediary. Now, the place of supply as per export of services should also be outside India, right? However, in case of intermediary services, the place of supply is in India. Therefore, this condition due to which this condition of place of supply being in India is why this intermediary service will not be considered as export of services. So, for a transaction to be considered an export of service, the place of supply must be outside India, and as per section 13 subsection 8 clause B, the place of supply of intermediary service is the location of supplier which is in India. Therefore, intermediary services are disqualified from being considered exports of services. Now, as a result, intermediary services provided to foreign recipients are taxable. Now, we saw an important note in the previous slide that the place of supply provision under section 13 is only applicable in case either of the supplier or the recipient is outside India. Now, what happens when both the supplier and the recipient is located outside India? That is not just one of them is outside India. In this case, both of them are outside India, and intermediary services is being provided by a service provider from India, in India. In this case, notification number 20/2019 specifically has provided an exemption saying when both the supplier and the recipient of the goods are located outside India, IGST is not applicable to intermediary services. Now, this is with the clarification regarding intermediary services to be treated as export of services. Now, we'll move on to zero rated supply. So, we saw initially that export of services will be treated as zero rated supply. Now, zero rated supply has been defined under section 16 of the IGST Act, and it goes on to say it means export of goods or services or both, or supply of goods or services or both for authorized operations to a special economic zone developer or a special economic zone unit. Now, authorized operations would mean operations related to developing or creating, laying of unit of SEZ in a SEZ zone. Now, this zero rated supply includes export of services, and the rate of taxes on such export of services would be zero. That is, there is no tax burden on the exporter, as we mentioned earlier. They have an option to either not pay tax or pay tax, take a refund, or utilize get a refund of the unutilized ITC also. However, does it mean that zero rated supplies are exempt supplies? No, it need not be exempt supplies always. See, zero rated supplies can also be exempted supplies. That is, exempted supplies can also be exported, but it is not always the case. Now, what happens to the ITC in case of zero rated supplies? subject to the provisions of section 17 subsection 5 of the CGST Act, the exporter can go ahead and claim ITC. That is, make sure the ITC is not blocked as per section 17 subsection 5 and go ahead and claim the ITC. And specifically for zero rated supply, even if the supply that the outward supply made is exempt supply, see, we discussed in the earlier slide, right? Even if the outward supply, that is the export of service being made is an exempt service, you can still go ahead and claim ITC. However, if the exempt supply is being provided in India, that is, it is not being exported, we all know we would not be eligible to claim ITC, as we would be required to reverse it under Rule 42 and 43 of the CGST rules. Therefore, this truly means that the export of services or goods are truly zero rated in India. Now, do we mandatorily require GST registration? Yes, you mandatorily need a GST registration for the purpose of applying for the refund and getting back the amount paid as tax or claiming the unutilized ITC. Now, for zero rated supplies, you have two options. That is, export under bond or LUT without payment of tax, export along with tax payment, and you can claim a refund later on. Now, let's look at the first scenario. That is, you're exporting under a bond or LUT without payment of tax. Now, the procedure has been provided in Rule 96A. It says the exporter has to execute a bond or a letter of undertaking. Now, what does this bond or letter of undertaking say? The exporter I'm sorry, just a minute. Sorry for the interruption. So Rule 96A of CGST rules says exporter has to execute a bond or LUT prior to the export or supply to an SEZ. So what do they undertake under such bond or LUT? They undertake to pay the tax along with interest if at all they don't export the goods within the specific time limit, or they don't receive the consideration for the export of services within the set time limit. Now, what is the time limit for the receiving the consideration? That is, what do they promise in the bond or the letter of undertaking? They say that they will pay the tax along with 18% interest within 15 days after the expiry of 1 year, or the period as allowed under the FEMA Act, whichever is later, from the date of issue of the invoice for export, or such further period if the payment of such services is not received by the exporter. In simple words, from the date of issue of the invoice for export, within 1 year, if I don't receive the export proceeds in convertible foreign exchange or INR, I have to pay the tax or tax along with 18% interest within 15 days from the expiry of the 1 year from the date of invoice. So 1 year is the time limit that you have to receive the payment. Within 1 year from the date of invoice, export proceeds for export of services will have to be received. Now, this is given under Rule 96A. Now, how do you file this LUT? The difference between LUT and bond and the sample bond has already been discussed in our earlier sessions under one of our sessions. So please refer to the set session, export of goods session in our YouTube channel. Now let's look at the basics of filing an LUT. After logging into the portal, under the services menu, we have a submenu of furnishing letter of undertaking, and we go ahead and click the menu, and we are directed to select a financial year from the drop down. Please select a financial year for which you're about to export the services and you're filing LUT. Now, if you have any previous letter of undertakings, please upload the same in PDF or JPEG formats, and the size should be less than 2 MB. And you go on and select these boxes. That is, you declare that the export of goods or services supplied without payment of IGST is within the time specified as per sub-rule 1 of 96A. That is, we go on and say that the time period of 1 year has not yet been expired, and the next one would be that we undertake to observe all the provisions of the GST Act has been complied with. And finally, we say if at all any of these we don't comply with any of these in the course of the exports or after the exports, we'll pay the IGST amount along with interest at 18%. So after checking all these boxes, we go on and provide the details and names and addresses of 2 independent witnesses. And then we go on and sign the form, and DSC is compulsory for companies and LLP. So this is a simple procedure for filing the LUT in the GST portal. Now this is the export of services without payment of tax. Now moving on to the refund provisions. I've touched upon the basic provisions of refund. We'll be having a detailed session of GST, of refund under GST in our upcoming sessions in 1 or 2 weeks. And refund, talking about refunds, refunds have been provided for in Chapter 11 of CGST Act and Chapter 10 of CGST Rules. Now, refund includes any refund of tax paid on zero-rated supply of goods or services, or inputs or input services used in making such zero-rated supplies, or refund of unutilized ITC as provided under Section 54, subsection 3. So, zero-rated supply of services, whatever tax, one option was to export services without payment of tax. That is, you file an LUT or bond and you export without payment of tax. And another option is to pay the tax and get the refund. And we can see that the tax paid on zero-rated supply of services can be claimed back as refund as per the refund provisions. So the process for filing for refund would be, we have to file form GST RFD1 in the portal with the required documents. A proper officer will scrutinize the application and they will grant acknowledgement in RFD02. However, if there are any deficiencies, the same would be communicated in RFD03. And for this RFD03, you either go ahead and reply to the form, or you go ahead and file a fresh application of refund. Now, next is RFD04. That is a provisional refund of 90% is granted within 7 days of acknowledgement in RFD02. And then RFD05 is issued by the proper officer. That is the payment advice to the for the refund to be credited to the bank account of the taxpayer. Now, the final order is issued in RFD06 for whatever the amount of refund is being granted to the taxpayer. If at all any amount is rejected, the same will be communicated to the applicant by issuing RFD07. So this is the process of refund in a very simplified view. And looking at the formula, that is what is the refund amount that can be claimed as refund under the IGST under the GST Acts. So the refund amount would be turnover of zero-rated supply of goods plus turnover of zero-rated supply of services into net ITC divided by adjusted total turnover. Now this net ITC will be the ITC on inputs and input services during the relevant period, but it excludes the ITC availed for which refund is being claimed. So if I have a total ITC and a part of such ITC I am claiming as refund, this ITC should not be included in this net ITC computation. For all those ITC that I've availed and for which I'm not also going for refund should be included in this net ITC computation. Now, how do we compute the turnover of zero-rated supply of services? It means the value of zero-rated supply of services made without payment of tax under bond or LUT, and it is calculated as payments received for zero-rated supply of services plus zero rated supply of services for which advance had been received in earlier periods, but the supply has been done now, the service has been completed now, but you reduce the advance received during this relevant period for which you're yet to complete the supply of service. So for payments received during the period for the services completed during the period, add advances received in the earlier period for the services completed during the relevant period, reduce the advances received during this relevant period for the services that is yet to be completed in the next years or next periods. Now this is the computation of zero rated supply of services. Now moving on to the computation of adjusted total turnover, it means the turnover in a state or union territory and it excludes the turnover of services. Now the second point says the turnover of zero rated supply of services as calculated in terms of clause D, that is as in terms of this previous slide, this calculation, and non-zero rated supply of services, that is non-exported supply of services. So the turnover includes turnover of goods and the turnover of zero rated supply of services and non-zero rated supply of services. However, it excludes, the adjusted total turnover excludes value of exempt supplies other than zero rated supplies. So if you are undertaking, if you are supplying any exempt supply as exports, that can be included. But if you are supplying some exempt supplies within India, it cannot be included in the adjusted total turnover computation. And also the turnover of supplies in respect of which refund is claimed is also excluded here. See, as under net ITC, the ITC for which refund was being claimed was excluded. Even here, the turnover for which refund is being claimed is also excluded during the relevant period. Now, relevant period means the period for which the claim has been filed. The period during which the export took place and you need a refund of the taxes paid on such exports, that period will be considered the relevant period. Now, Rule 89 specifically provides in respect of supplies to an SEZ unit or an SEZ developer, the application for refund shall be filed by the supplier of service along with such evidence stating that the services supplied were for authorized operations of the SEZ unit or developer. So under zero rated supply of service definition as per section 16, we saw that supply of service, goods or services to SEZ should be for authorized operations. So even now, the refund would also be eligible only when there is a evidence or proof that such supply of services was for authorized operation. So the specified officer of the zone, that is the SEZ zone, will have to endorse the supply of service provided by the supplier. Only then a refund can be claimed by the supplier on the taxes paid by them. Now, what is the time limit for claiming refund? This has been provided under section 54, subsection 1 of the CGST Act, and it says application to be made before the expiry of 2 years from the relevant date. Now, relevant date has been given as an explanation to section 54, and the relevant date for the purpose of services will be, it is given in clause C, and it says, in the case of services exported out of India, where a refund of tax paid is available in respect of services themselves, or as the case may be, the inputs or input services used in such services, the date of receipt of payment in convertible foreign exchange or in Indian rupees, wherever permitted by RBI, where the supply of service had been completed prior to the receipt of such payment, or the issue of invoice where payment of service has been received prior to the date of issue of the invoice. So it says for the export of services, the refund is available in terms of tax paid or in terms of ITC used for such exports, ITC on inward supplies used for such exports, and the relevant date will be the date of receipt of payment if the supply of service had been completed prior to receiving the payment, or if the payment was received, or the date of issue of invoice if the payment was received in advance to the issue of invoice. So this is the relevant date for the computation of refund. Relevant date for the application of refund. Now for SEZ, that is the zero rated supplies of goods or services made to an SEZ unit or developer, the relevant date will be where a refund of tax paid is available in respect of such supplies themselves, or as the case may be, the inputs or input services used in such supplies. The due date for furnishing of return under section 39 in respect of such supplies. So for SEZ, if I'm making a zero rated supply of services, and I'm paying tax or I'm not paying tax, I've utilized ITC on inward, I've incurred ITC on inward supplies for such supply of services. The relevant date shall be the due date of furnishing return under section 39. That is outward supplies. That is our GSTR 3B. The due date of furnishing the return shall be the relevant date for applying for the refund. Now, we also saw that the RFD 01 will have to be filed along with the required documentary details. So, what are such documentary details that are required to file RFD 01? A covering letter and a bank realization certificate or a foreign inward remittance certificate. See, this is important because a payment, as we saw in the definition of export of services, it specifically says the consideration should be received in foreign currency or INR. And another important provision of the law is that refund can be claimed. That is, you file an LUT saying if you don't receive the payment within 1 year from the date of invoice, you'll pay back the tax and along with interest. Therefore, receipt of payment in export of services is very important because you have no other proof other than receipt of payment to prove the occurrence of the export of services. Therefore, your bank realization certificate or proof of payment of the receipt is very important, and your export invoices, your form GSTR 3B and 1 where you declare such export of services, and your application for refund in form RFD 1, a cancelled check, and if your refund claim is exceeding 2 lakh per quarter, a certificate from the chartered accountant or a cost accountant is required. Now, moving on, the next would be refund on a provisional basis. Now, if there is an option available as per section 1554 subsection 6 that a provisional refund up to 90% of the zero rated supplies will be sanctioned within 7 days of the acknowledgement of the application. That is, you file your refund application in form RFD 01 and the proper officer, after scrutinizing the same, will issue RFD 02 acknowledgement. And within 7 days of the issue of such acknowledgement, you have an option to get a provisional refund of 90% of your refund claims. And this provisional refund will be sanctioned through form RFD 04. So this is the option available for exporters of zero rated supplies. Now, in some specific requirements with regards to invoicing for exports is, the invoice shall carry an endorsement saying supply is meant for export on payment of IGST or supply meant for export under bond without payment of IGST. Also, which currency to use in your export invoice. As per the RBI master directions, there is no restriction on export invoices to contain foreign currency only. The invoices may also be presented in INR as well. Now, this is with we are done with export of services. We've covered all the basics regarding export of services. Now, let's move on to import of services. We'll touch upon import of services and few important provisions and few examples. Now, like export of services, import of services are also defined under IGST Act, and the definition is provided under section 2 clause 1, where it says import of services means the supply of any service where the supplier is located outside India, the recipient of service is located in India, and the place of supply of service is in India. If you remember the discussion, for exports, we had 5 conditions that had to be complied simultaneously. And one such condition was with regards to consideration. And here the consideration point is not given. They are just concerned with the supplier of service, recipient of service, and place of supply. So what does this mean? So import of services have been provided for in Section 7 of CGST Act and Schedule 1. So Section 7 says supply includes import of services for a consideration whether or not in the course of furtherance of business. So it says there should be consideration, but there is no issue if the import of service is for business or for non-business purposes. And the Section 7, subsection 1, clause B goes on to say activities specified in Schedule 1 made or agreed to be made without consideration. So they're covering import of services without consideration also. However, it is limited to entry number 4 of Schedule 1. Schedule 1 talks about activities to be treated as supply even if made without consideration. So it says import of services by a person from a related person or from any of his other establishments outside India in the course or furtherance of business. So the definition of business has been provided in the Section 2, Clause 17 of CGST Act, and related person has been explained as an explanation to Section 15. So let's look at the differentiation between the import of service with consideration and without consideration. So Section 7(1)(b) and entry 4 of Schedule 1 both talk about import of services, and recipient of services under both these scenarios are any person can be the recipient of service. Who can be the supplier of service? Under Section 7(1)(b), that is with the consideration scenario, any person can be the supplier of service. But when the import of service is without consideration, the supplier of service should be a related person or any of his other establishments which is outside India. See, so supplier of service should definitely be outside India, but just that the supplier of service will be a related person or any other establishment outside India. And consideration, as we saw under Section 7 subsection 1 clause B, it is with consideration. Import of services made by any person outside India to a recipient in India with consideration. Now entry 4 says import of services by any person in India from a supplier of service who is a related person or his establishment outside India without consideration. Now what is the purpose of the import of services in both these scenarios? See, with consideration, you can import services both for business and non-business purposes. However, if you're importing services for without consideration, it should be strictly for business purposes. Now let's look at the taxability of both these scenarios. Now, if the import of services are for consideration and are for business purposes, they are interstate supplies and IGST will be levied on them, and the recipient who is in India is liable to pay tax GST under RCM. Now, the import of service with consideration, that is for non-business purpose, will also be considered as interstate supply, and it is also leviable under IGST. However, an exemption has been provided for this import of service with consideration for non-business purposes, but excluding OIDAR services. OIDAR services we'll discuss in detail in the next slide. So this, for in summary, for import of services with consideration for non-business purposes is exempted. Now, import of services without consideration, that is Section 7(1) clause C, read with entry 4 of Schedule 1. It will be considered as interstate supply and IGST will be levied, and the recipient is liable to pay GST under RCM. So this is the scenario where the recipient is in India, is importing services from a related person or his establishment from outside India without consideration for business purpose. So this recipient in India is liable to pay IGST under RCM. Now, what is OIDAR service? Now, OIDAR service has been defined under Section 2, Clause 17 of the IGST Act, and it says online information and database access or retrieval services means services whose delivery is mediated by information technology over the internet or an electronic network, and the nature of which renders their supply impossible to ensure in the absence of information technology. So two conditions are: the delivery should also be through information technology over the internet, and such supply should be impossible without the usage of internet, without the usage of information technology. Examples of such OIDR services could be, as included in the definition, advertising on the internet, providing cloud services, e-books, music, online digital content, providing data, providing digital storage, and online gaming, excluding online money gaming. Now, as we discussed, for a service to be categorized as OIDR services, two conditions have to be met simultaneously. That is, the supply should be impossible without information technology, and the delivery should be through internet. However, it is important to note that using the internet just to merely communicate is not always an OIDR service. It could be an OIDR service. However, always, does it mean under all circumstances using the internet to communicate would be an OIDR service? No, definitely not. Now, what is the taxability of such OIDR services? OIDR services are being provided to the recipient in a taxable territory. Now, this recipient can be a non-taxable online recipient, that is a person other than registered, unregistered person, or they can be a registered person. To simply understand, NTOR is non-taxable online recipient means any unregistered person receiving online information and database access or retrieval services located in taxable territory. So, if an OIDR service is being provided to a unregistered person in taxable territory, the OIDR should pay tax under forward charge. However, if it is providing services to a registered person, then the registered person is liable to pay tax under reverse charge. This is the taxability of OIDR services. Now, a very basic example, basic question is Amazon classified as an OIDR service provider? See, Amazon is providing lots of services, and only specific services like its Prime Video streaming service or Amazon Music could be considered as OIDR services. Its e-commerce operations and physical product sales will not be considered OIDR because they don't meet the criteria of automated or digital or minimal human intervention services. That is, their supply is not impossible without information technology, or the delivery is also not impossible without information technology. There is human intervention. Therefore, few of its services will be OIDR services, and most of its other services would be other than OIDR services. Now, another example which has been highlighted through a notification is notification number 10/2017 IGST. An exporter gets an order from a selling agent to whom he pays commission. Will it be taxable under GST? The selling agent is located outside India. So in this case, the foreign agent who facilitates the supply of goods is covered within the definition of an intermediary. Since the supplier is outside India and the recipient is in India, the place of supply would be as per section 13 of the IGST Act. And as we read earlier, the place of supply is the location of the service provider. That is the place where he is registered. Since a foreign agent is located outside India and not registered in India, the commission paid to him will not be taxable. So the foreign agent is under the covered under the definition of intermediary. That is, he is merely facilitating by providing buyers, by getting orders for the exporter in India. And for such intermediary services, the place of supply will be the location of the supplier, which is outside India, and therefore it is not taxable in India. The commission paid to such foreign agent is not taxable in India. So this is with respect to import of services. I hope I've made the basics clear through this session. Please put forward any of your queries, and we'll be taking them up in a few minutes. We have one query from Mr. Shivakumar B. And his query is there any option to get refund of RCM payment for import of service, that is softwares, if the supplier only deals with export of service, specifically software company? Sir, yes, sir, you have the option to get refund of RCM payment for import of services. And Mr. Srinivasan has asked to share the PPT. Yes, sir, we'll be sharing the PPT after the session is completed. So if anyone else has any queries, please post them in the Q&A option. Okay, so we've come to the end of the session. If at all anybody has any queries or any clarifications needed, please send it to our WhatsApp or our mail ID. The number and the mail ID is displayed on the screen, so please note them down. And yes, so let's end the session if there are no further queries. I think we have another query from Mr. Sapan Palai. Case study or litigation related to export or import services can be shown through your PPT so that we have better practical idea. Sure, sir, we'll be doing the same in our next sessions when we talk in detail of on these topics. Definitely. So yes, if there are no more queries, we'll be concluding the session. Thank you to each and every one of you for joining the session. Yes, let's